Well, hi there everybody. Welcome back to my YouTube channel. Again, thanks for following, subscribing, giving thumbs up and things like that. What we're doing today is we're going to look at the up or down application inside the OptionColors platform. I am the designer and the founder of both SJ Options and OptionColors. What I want to talk about today, though, again, is just review some of these signals the software is giving and perhaps give some trade ideas that could go along with these signals, because I want to make sure, that the followers out there have an idea of the applications that are built inside this volatility trading software. What I've done is I've gone over to my ticker picker and I'm at up or down. So up or down, again, what it does is it predicts the direction of volatility for various tickers. Not only does it predict the direction, but it gives an actual statistical probability of that directional change happening. It also shows you an exact amount, for example here, that volatility will change. In this example, I'm looking for a drop in volatility, so I click the down button. I have different filters up here, and I'm looking at a 3-point drop in the volatility. So these are the tickers that are displaying right now that the software is forecasting this drop for. So we have Amazon, for example. Notice how it says 85%. So we have an 85% statistical probability that the volatility of Amazon is going to drop by 3 points. So again, I can click right here and I can see all the past. We have a couple different interactive charts, but I can see all the past calls and how many times it's been correct and so on. And so these are algorithms that I write. So for example, look at all the times it's been correct and so on. You can see the times it's been wrong and the times it's been correct over a number of years. Okay, so we have some other signals that are issued. PAN W, 83%, again for a 3-point drop and so on. NDX, the vols, again have an 81% chance and so on. I just wanted to show you these. So just in case you trade any of these particular tickers, and maybe it'll give you some ideas of ways to take advantage of volatility. So what I've done though in today's video, I just created a little trade to look at for Amazon, just to give you an example of how you would use this information. But let's jump over to the price chart. And so here we can see that where Amazon is really trending up, but it's in a channel and now it's like the bottom of the channel. So if this support holds, then perhaps, the price is going to move up here somewhere. And so you can certainly create some kind of short Vega strategy that might end up in this range pretty soon, like maybe 1900 to the 2000 range in the near future, maybe like a month. Okay, so that's some criteria that we can use, to build a trade to take advantage of the current situation. Now again, there's never a guarantee, so it could also totally collapse here and fall down, and then you have your support like right here, another support over here, support over here. So when you create these trades, you always want to be conscious of the downside risk as well. And try to set up your trades, so you have a really defined risk. So just because you're looking for a short Vega strategy doesn't mean you have to really do like a condor or something that has a lot of risk on the downside. Okay, let's come over to the Analyze tab, and you'll see here I created something really basic, just a butterfly spread. And you notice that it's right around this 2000 level, where if it hits that support, bounces up, then there's a good chance it's going to bounce right into this range, right? So here, what I call the bar, you're risking about $575 on this trade, which is really your entire investment, but you do have a defined risk. Now, if we do get the bounce here and we get that drop in volatility, so I think we were looking at a 3-point drop, something like that, and then let's say within the next month or so, then you get a really good idea of your chances here. So if we get back in this price range, then you're looking at maybe $300 to $400 if we just get through this area, and your investment's the $575. So again, if you go with the statistics and you can accurately analyze potential drop in that volatility, you have an 80% chance of that happening. Pretty decent return potential, a decent defined risk on the downside. Of course, you can also set this up more like a brokering butterfly style, where you even have less risk over here and more risk on the right side, but it wouldn't be quite as bullish. But just gives you an idea of a way to take advantage of, future volatility drop. Before we go, I wanted to come back over to the up or down application and do a little bit more analysis on the possibilities of the volatility drop. So I've changed the drop to a 5% drop, and we still have a 75% chance that Amazon's going to drop that much. So let's go back over to the risk profile and model in a 5-point drop and just get an idea of these potential returns on this trade. Again, if we get the volatility drop along with the price move. So if we do move over here somewhere, we're looking at up to like 87% return, which is 88%, which is, just over $500. So just want to leave it with that. I think it's, this trade has some potential here, almost a 1-to-1 with the dollar amount risk reward there if you do get the price move and that volatility drop. And it's just an example of how you can use option colors to trade with volatility, and just a simple butterfly spread that has a really good risk to reward and increase those probabilities at the same time. I know a lot of traders out there, do risk an awful lot to make just a little bit when they have a high probability. But, statistically, you have a pretty decent chance in this type of trade with a pretty nice risk to reward. So I hope you enjoyed that tutorial, and thank you so much for following the YouTube channel. And if you're not subscribed, then please subscribe. So thank you all, and have a great day.